Let's start the video with a very simple question. How on earth did Dan Zanger, momentum swing trader, turn 10 grand into $46 million in 23 months? How did he do it? That question fascinated me. I've studied Dan, I've studied his methodology extensively, and there are three main parts I would like you to take away from this video. Part number one is understanding the type of stocks and the chart patterns that Dan is looking to trade. Number two, who is Dan Zanger? Understanding his mentality, his thought process, his mindset is going to be a real key of this video. Then number three is how do you go about screening for the stocks that Dan looks to trade? That's where I'm going to jump across to MarketSmith, who are the video sponsors. There's a link in the comment section below if you're interested in a discounted trial, and I'm going to show you how you can create a screen that I run in MarketSmith to find these stocks that Dan is looking to trade. In essence, that have huge earnings, huge sales, institutions are looking to pile in on them, and there is fantastic relative strength, because you'll find out a little bit later on. William O'Neill, who wrote How to Make Money in Stocks and the founder of Investors Business Daily and MarketSmith, had a significant impact on Dan Zanger. So let's get into it. Dan Zanger, 10 golden rules. This is the summary. Don't worry, you're going to learn about all of this as we progress throughout this presentation. Trade breakouts from well-formed base patterns. Buy base breakouts preferably with a volume surge and never enter greater than 5% above the technical buy point. Be quick to exit if price returns under the technical buy point by $3 to $5. Some traders employ 5 to 7% stop losses. You probably would have read about that in O'Neill's book as well. Sell part of your position as the stock advances. Hold your strongest stocks and sell your weakest stocks. That there is also a line from Reminiscences of a Stock Operator by Jesse Livermore. Those two books, How to Make Money in Stocks, Reminiscences, were Dan Zanger's two favorite books. Trade only strong stocks from strong groups. In essence, focus on the leadership. After long market rallies, stocks become vulnerable to a sell-off. Look for breakdowns and exit promptly. It takes volume to move stocks. Volume is key to your stock's success. Monitor the stock at the technical buy point plus action at the market before entering. Never go on margin until you have mastered the market. Now this slide here, this is actually the breakdown of how did he do it? How did he turn 10 grand into 46 million in 23 months? These are Dan's own words. At the beginning of my big run, I would only own one stock at a time at 2 to 1 margin and swing trade that one stock up from 2 to 5 days and then move on to the next one. As time goes on, I increase my allocation, owning 2 stocks at a time. I stay at 2 stocks until I go over the $500,000 portfolio benchmark. I then branch out to owning 3 stocks. I pretty much stay with 3 stocks until I go over 4 million in cash value. When I get to about 20 million, I have 7 to 8 stocks. At the peak of a run, I own about 12 stocks at any given time. Certainly early on, if you're a newer trader, you need to understand this. Certainly early on here, this is extreme concentration. Especially, this is extreme concentration without margin, but especially when you factor in margin as well. This is extreme concentration and was one of the main reasons. Obviously, Dan's technical ability and skill is fantastic, but his risk management as well, and the concentration to have and kind of the control of emotions to be able to do that as well is absolutely staggering. But make absolutely no bones about it, this is extreme concentration. I cannot stress that enough. Now I've got around about 15 charts or so. And these are charts from the time period where Dan made his big run, and at the time of an interview where I got a lot of these quotes from. Really good interview. If you search YouTube, you'll find it. The interview is from 2005. So these are going to be charts that are during their kind of growth phase, if you like. So you're going to see charts of Google, Apple, Amazon, eBay, Qualcomm, so on and so forth. So I'm going to read out the quote because I really think the quotes will help you understand Dan's mindset, his mentality, his thought process. How did he think about things? So important to understand. Then obviously we can talk about the chart patterns thereafter. So I'm looking to be selective in my selection of stocks with earnings up 50, 60, 80%, if not more. Stocks like Google have earnings up 140%. I'm looking for basically relatively new companies that dominate their space, that are global players, niche players that are changing the entire space of which they operate. That sounds very similar to what you would read in William O'Neill's book, How to Make Money in Stocks, which had a significant impact on Dan, as you're going to learn a little bit later. So if you look at Google here, you have a huge run up, good action on the earnings, holds up, and then it builds this flag type pattern into the 10 EMA. So you get this flag type pattern. Look how the volume dries up. Now, if you want a little freebie, if you search my name on TradingView in the indicators, Jack Wilsellis RS line, you will find my relative strength line. Just a little point here. If a stock is building out, especially a flag type pattern like this, and it's got 52-week highs coming through on the relative strength line, the stock is screaming at you. It is incredibly strong. So a common theme that you're going to see here, not only were these stocks that basically met the CAN-SLIM criteria, but the relative strength was ridiculously strong. Let's go on to the next one. This is eBay here from actually the IPO. Volume is everything. No stock can make a move up without volume. The greater the volume, the better the potential move. So look at eBay here, and this is a theme that you're going to see on the eBays, the Apples, the Amazons, the Googles of the world. Around the earnings, the vast majority of cases, and a stock that I'm going to show you, two stocks I'm going to show you later on when we go into the screening for stocks present day that look very interesting and tip many of the CAN-SLIM boxes, if not all the CAN-SLIM boxes, is huge relative volume coming through on the earnings. Look at the volume coming through. Look at the volume coming through. And then you build a flag type pattern here, because he kind of Davis box as well, but a flag type pattern. Then you build this little cup and handle. So flags, cup and handles, triangles. You could also think about VCPs as well, so low pivots, mid pivots as well. So see how you get this little cup and handle type pattern for these momentum stocks. The 10 EMA and 21 EMA, which is the black line is the 10 EMA, the blue line's the 21 EMA, and also the 50 SMA, which is this purple line that you see here. Very important indeed. So here you get a flag, here you get a cup and handle with a little low handle coming through here. Note the tightness in price. Note how the volume dries up. Look at the 52-week highs coming through. Then you get this VCP, 1 contraction, 2 contraction. Look at the tightness, 10, 21 and 50 clustered like this. Look how the volume dries up, 52-week highs soon after the breakout. These repeatable characteristics, you just want to just hammer it into your mind. Just reps and sets, reps and sets. This is Dan on trading, and you actually get a real kind of emphasis for his love of this as well. Boy, I love it. I wouldn't trade it in for the world. Every day is thrilling. Every day is new and it's exciting, filled with lots of spills and chills, but the rewards are absolutely phenomenal when you get it right. It takes years and years of learning and hard work and 15-hour days. A lot of ups, a lot of downs before you get to put the whole package together. But if you do the homework, if you really study bright, hard, long hours, you just stay focused and get rid of all the stupid indicators out there, all this MACD stuff, volume accumulation and money flow. I don't use any of it. It's totally worthless. It's price action, it's volume, it's chart patterns, it's spectacular earnings, and that's all there is. Debunking a few myths there, isn't it? This is a head and shoulders bottoming type pattern as well. Left shoulder head, right shoulder perfectly holds to 200 SMA. Google has been my big winner, and I've had an awful lot of money in Google. Remember Dan's kind of concentration. This is actually in 2007. An extraordinary amount of my money in Google. Here's a company that is underknown and underowned. I love that phrase. Underowned and underknown and underowned. Try and say that quickly 5 times. But yeah, everyone uses Google for search. So think about this from a CAN-SLIM perspective. If you read the William O'Neill book, How to Make Money in Stock, Google are revolutionizing how they collect money for revenues. You think about Google ad, Google revenues coming through. No one was really doing it. That's what you want. Someone who is the dominant leader. Earnings are explosive. They're up 100%, 120% and 140%. It's like quarter over quarter based on year over year. Revenues are up 90%, 95%, 110%. As the institutions come in and start buying it, it fuels stock prices, so the stocks run up. I've been in the stock on 3 big runs, and the money I've made has just been gargantuan. Let's do another one. This is Google again. I allow a stock by its own action to put me into the trade, and then once again by its own action to take me out of the trade. That's very much a Jesse Livermore point as well, from Reminiscences of a Stock Operator. So this one here, it didn't go on to make an absolutely huge move. This is 2004, but it builds this nice, it's quasi VCP, volatility contraction pattern. Those of you who studied Minervini's work. Big move on the earnings. Look at the volume coming through, 52-week highs, 1 contraction, 2 contraction. Look at the tightness coming through, means you can create more asymmetric risk versus reward trades. Note where these stocks are then setting up in relation to key moving averages before they break out. Really important. So the stock's acting well, but then you can start to see this change of character behavior. The bearish candlesticks, the widening of them, the volume coming up on them as well. I think the market is a lagging tool. So if I'm going to wait for the market to take off and break a trend line or break through a resistance point or something, my leading stocks have already gone. So again, the leadership stocks are leading and then the market will get up and follow that leader. So I focus in on the leading stock first with the big earnings. What Dan's saying is, if you're waiting for the market to suddenly look all rosy and look good, a lot of the leading stocks, they would have already gone. They'll be trending up. They already would have broken out of their basis. So dial it in, focus on the leaders. Amazon. This is where the reporter asked that, what would you attribute your tremendous success to? Following the leaders in the market and having a lot of the money in the leaders, that concentration point. I'm looking for stocks that have great explosive earnings and explosive price movement on the explosive earnings. So if you take a look here at Amazon, look at the volume coming through on the earnings, prices powering up, and then it builds this quasi cup and handle type pattern, bit of VCP type action, volatility contracting certainly over here. Look how you go tight, tight, tight. See how price is getting extremely tight on the 10 EMA, and look how the volume dries up. There's no volume. Look at the 52-week high. Amazon is screaming at you, it's a leader. Then note what happens after the breakout. Look at the trends that play out. What moving averages are the stocks respecting? Then a nice quote over here in terms of the screening. Once or twice a day, I manually scan about 1,500 stocks. There is a hard work element to this. There is no kind of magic pill that's just going to put the perfect flag in front of you, the perfect VCP, the perfect cup and handle, the perfect pennant, the perfect triangle. You have to do the work, have to look at the leading stocks, scan for them, which I'm going to teach you later on. Amazon again. Basically, I'm focusing in on the leading stocks that make the big moves all the time. Typically, if I find a stock that has powerful chart patterns and really explosive behavior, underneath you'll find a stock that has really tremendous fundamentals. Here's a really nice flag that Amazon built. This is split adjusted, but runs up from about $1.20, what's that up there, to $1.90, pulls back. Note the tightness, so price pulls into the black line. The 10 EMA, really important for quick momentum stocks. See how it pulls in and then it's tight, 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 and the volume just steps down. This is where Livermore's point, the line of least resistance is forming. There isn't much selling pressure because price action is getting really, really tight. Volume is coming down. There's just not much supply coming to the market. Then it breaks up. Look how the stock then rides the 10 EMA, rides the 21 EMA. Think about that for some of your sell rules as well. Amazon again. If a stock, remember this is in 1998, this is not Amazon in 2023, this is Amazon in 1998 during much more of its growth phase as well. If a stock is breaking out of a pivot and or base area and has powerful earnings and it has a really big global product, Apple is global, Google is global, SanDisk, even though the name is not well known, they're making products that go into these global products. These are powerful stocks and these are the criteria that I need to see. And when they make their big move on volume, then I'll go ahead and make my move. I want to go with the institutions when they go. So again, Dan was looking for what are in essence, it's the O'Neill, it's Can-Slim criteria. What are the liquid leaders in the market? What are the ones that the institutions have to get in and that have huge earnings coming through, huge sales coming through? They have the liquidity as well. They have fantastic relative strength. Look at Amazon. See, just in the base here, as it starts kind of going sideways and drifting, see how you get these 52-week highs coming through. Remember what I said earlier on eBay? Here you get the black line, the blue line, and the purple line, 10, 21, and 50 SMA. See how they're clustering. See how the volatility dries up. You then get what I call a trigger bar, really tight bar. Look how there's no volume on it, and then see how the stock then powers out here. This obviously split adjusted for Amazon. It was not 36 cents when it was breaking out here. Amazon again, cup and handle type pattern. So here's the cup, here's the handle. Look at the tightness, look at the volume drying up. So question to Dan from the interviewer, what would be your single biggest lesson in 2005, which was when this interview was taking place? Not to be in the market all the time and to trade far less than I do. I really have found that the market may have two big moves during the year and that they may last 6, 8, 10, 12 weeks. And other than that, they just exhaust themselves and the rest of the time, the market is just consolidating the game. So the big lesson for me this year, being 2005, has been to trade less, trade fewer stocks, own just about 4 stocks that are real powerhouse stocks. So tick those Can-Slim criteria, huge earnings, huge sales, global products, as Dan was saying. When the market bottoms out and then the market will take off and run for maybe 10, 12, 13, 14 weeks, whatever it does, and then just trade out and then go to golf. Dan was an avid golfer, he probably still is, and go to swimming and go to cash. Just have fun and enjoy and wait for everything to set up again and do it again. It takes about four to five, that should say, months for everything to set up again. This is also a I really like this quote from Dan as well. I never give up. I never ever give up. This was actually after Dan had a 75% drawdown during the 2002 to 2003 bear market. He had a stock that actually brought his account down. I think it was around about 32% in a single day, but he had a drawdown of 75%. So the interviewer was actually asking him, what is it that separates you apart? And before this quote here, it actually says persistence. I never give up. I never ever give up. And that kind of resilience and persistence, I think is extremely key, and was obviously key to Dan's success as well. So this one here, question to Dan. What are some of the things to give you a heads up the market may be bottoming or about to take off, I should say? Well, leadership stocks will be sitting near new highs, such as Google or Apple. This was in October of 2005. While the market looks like it's cascading down, this is the relative strength point. So you got the market that's doing this, but hang on a minute, these leadership stocks are doing here and sitting new all-time highs, maybe 52-week highs as well, basing constructively. RS line, remember what I said about the 52-week highs. So sitting near new highs where powerful earnings will come out, build bases, and then the stocks explode. Meanwhile, the market is still trying to grab its legs, and the market will lag these leading stocks, and that's why they're known as leaders. This is a VCP type pattern. See this? One contraction, two contraction, tight. What do you notice? Black line, blue line, purple line, 1021, 50 SMA. Look how the volume dries up. It's the same thing as Jesse Livermore said in Reminiscences. There's nothing new under the sun. This one here is Apple. There's a couple of chart patterns for us to talk about. What are the clues? The institutions are moving. That should say. I see massive volume. If a stock is trading 4 or 5 million shares a day and all of a sudden it starts trading 15 or 20 million shares a day and the stock is leaping $3 to $4 and the percent change in volume is really one of the big keys to find the big winners and following institutions. So institutions, because of their size, they can't hide it. It turns up in the volume. The volume is the footprint of the institutions. So in talking about institutions, they're just not afraid to really pile in hundreds of millions of dollars on a trade to get into that stock. And if they want it badly, I want it badly. And if they don't want it, I don't want it. It's as simple as that. So Dan is following the institutions. And again, how are you spotting the institutional footprint? Well, it's chart patterns, it's relative strength, it's doing your research on what are the leading stocks in the market, earnings, sales, estimates, all of that good stuff. Stocks near 52-week highs or all-time highs, 52-week highs coming through on the RS line, and then constructed basing patterns as well. So if you take a look at Apple here, you actually get this little low pivot, 10, 21 and 50 just in here, but then it builds out this larger cup and handle, positive reaction to the earnings, then it builds this mini flag Davis box, and it builds a bigger flag type pattern here. See where the stock is when it's setting up before it breaks out in relation to these key moving averages. Look at all the 52-week highs on the RS line. The stock is screaming at you. Remember, relative strength, it's not my opinion, it's not Dan's opinion, it's not your opinion, it's the opinion of the market. Focus on the stocks displaying the best relative strength and tick in those CAN-SLIM criteria. Here's Apple again. If the 20-day average volume is 4 million and the stock is trading 4 million after 2 hours of trading in the day, the stock by the end of the day could be running 16 million shares a day. So this is talking about the breakout. That's the kind of percentage change that I'm looking for. Changes of 300, 400, 600%, whatever it is, it's got to be huge on a relative basis, and the stock has to be breaking out. So breaking out of a well-defined base, and I'm looking for the market to be oversold as a general rule to start getting into these big moving stocks. Qualcomm 1999 had excellent little VCP down here tightening up. Look at the 52-week highs on this stock, powers up, see how it just rides this 10 EMA in here, builds this flag, builds the high lows. Look how the volume dries up. This stock then goes up around about 97% in the space of 3 weeks. Look at the 52-week highs coming through. But Dan says, even if a stock has a super chart pattern, I probably won't buy if earnings are up 25% and revenues up 25%. The stock really has no place to go. So by these quotes, you can see the emphasis that Dan is putting on huge earnings, huge sales, global product, kind of liquid leader in the market, a true market leader type stock. Never lose focus on the market or the job of watching stocks. This one here, let's go on to the next one. This is Charles Schwab. Sorry, this should say Charles Schwab up here. I own what the big institutions want to own and go when they go. I'm always scanning to buy leading high beta stocks. That means more volatile stocks relative to the S&P 500 coming out of well-defined patterns. So you can see here, 1 contraction, 2 contraction, tight, 10 EMA, 21 EMA. Look at the 52-week highs. Then the stock builds this bigger base. See how it's building the higher lows, and then you get the extreme tightness over here. Look how the volume dries up, 52-week highs in the base. The stock is telling you it's extremely strong. What's it? It's about 100% move in the space of a month or so, 5 weeks. But look at the tightness, look at the 52-week highs. The leadership is obvious if you know where to look. Now, Dan did say this is looking then at a short. I really don't make a whole lot of money shorting stocks. I found shorting stocks to be very tough. Remember, a stock can go down 100%, but it can go up 200, 300, 400%. Stocks like Tesla went up 5,000% in 18 months. So the real big money is made on the upside. I actually think this is quite humbling and kind of links back to Warren Buffett's point. Obviously, Dan Zanger and Warren Buffett, extremely different in terms of one being a momentum swing trader and one being a value investor, but the circle of competence point. Buffett knows his circle of competence. Dan Zanger, very humbly here, is saying, I know what my circle of competence is. However, I've had some very good shorts in my career, and most notably last January, they were talking in October 2005 at the point of this interview, where eBay earnings were beginning to decelerate quite rapidly. eBay had broken down from a high-level channel, which is this up here. So it broke down from this channel, this kind of flat base channel, if you like, and then the stock created a bear flag pattern. After that, I noticed that the stock was beginning to sell down the day of earnings being reported after close. Don't worry, I'll explain it in a second. So I began to short the stock the day earnings were going to be posted. I ended up shorting 160,000 shares, and the stock gapped down after earnings because they missed earnings and projected weak earnings going forward, so bringing the guidance down, and stock gapped down $20. So this is the flat channel in here, quasi kind of Davis box as well. But do you see how, if you look at the chart here, do you see how there's a change of character? eBay is in the context of a very strong uptrend here, but then earnings have begun to sell. The market at this point here, I think, had been turning up for around about 3 or 4 months as well, so it was all a little bit long in the tooth. But do you see how you get, I call these bearish synchronicity bars, which is basically a widening of the price spread to the downside and volume picking up above the 30-bar average, which is this black line. So bearish synchronicity bars, multiple. There's 1, 2, 3, 4 in here. The stock then goes sideways, build this bear flag, you get one bearish synchronicity bar in here, and then you see it starts taking out the low. So this is what Dan's saying here. So earnings are being reported after the close on this day, but you see how the stock, there's been this change character, it's topping out here. See how it starts sliding off here. Look at the weakness going in. So you have to think, in these 2 weeks leading up to it, do you think some institutions had maybe a little clue of what potentially was going to happen, and they were looking to exit their positions ahead of the earnings? Then you can see, so Dan then actually exited his position here. I think he had a gain of 3.2 million in the single day. He then, from what I can understand, he covered his whole position on the gap down here for around about 20 points on 160,000 shares, so 3.2 million. Stock then continued to slide a little bit, reclaim the 10 EMA, and then turn around. But he did short, but as I said, shorting very, very tough. He focused much more on the long side. This section here, I wanted to take you through. There's a couple of quotes. I think there's around about 6 quotes that I just want to read to really give you an understanding of Dan's mindset, mentality, his kind of thinking as well, and how much work he actually put into this as well. So the interviewer asked him, do you have any favorite books? My favorite book is How to Make Money in Stocks by William O'Neill. For me, it's the stock Bible. I've probably read the book front to cover maybe 6, 7 times for the first 5 or 6 months of my trading, and then I read selective chapters probably 30 times after that over the next 6 years. He was studying this for 6 years, as you'll see. I think I did the quote earlier on. He was studying chart patterns 30 hours a week for 6 years before it all started coming together. There's a real time element to learn this. So 30 times after that over the next 6 years, constantly hammering into my mind how to trade, what your mistakes are. You just can't do this. This is going to be wrong. And over and over and over and over again for 6 years. It was constantly changing my mind, my thought patterns, what I'm looking for. And after a while, it was like the light really came on. It's like eureka, light coming on moment. I started making incredible amounts of money. And then when the internet bubble hit, that's when things really took off for me. Up until then, it was a brutal learning curve, lots of ups and downs, making money, losing it, making money, losing it, and finally putting it all together. Then the bubble hit, and it was just the right trader with the right mentality, the right trading tools in the right market environment. Other books, that have to be read by people who want to learn how to trade chart patterns. The Jesse Livermore book, Reminiscences of a Stock Operator, is critical, really teaching you how to identify when to get in and when to get out of stocks, trading fast moving stocks in particular. Don't worry about expensive stocks. They're probably the biggest money makers in the market percentage wise. You really need to read these over and over and over and over again until you just know it inside and out. So when you see the situation in real time, you just know how to react. So if you follow me for a while, you know I speak about deliberate practice, the reps and sets, studying things in a very deliberate manner, trying to improve your skill set in different areas of trading. You can't imagine the amount of hours that I put in. This is Dan studying for those 6 years. Weekends, 6, 8, 12 hours on the weekends, 3 to 4 hours after my regular job. It takes a long time to put the whole package together. I've got one more page of quotes, then I'm going to take you across the Market Smith where I can show you a screen that you can run. So the market's not here to give you money, it's here to take your money. So you have to learn to play with the pros. The market is designed to shake you out of your cash. Once you get the routine down of how they're, in terms of the larger operators in the market, the institutions, they're trying to shake you out, then you can be in front of them. And that's what the game is really about, being in front of the institutions. What's your advice on buying cheap or expensive stocks? I never made any money in the market until I quit buying cheap stocks and always focus on buying the most expensive stock in the market. Right now, this was around about 2005, October. Right now, I always focus on $60, $80 or $100 stocks, but I also look for $150, $300 stocks. Boy, when these things get up and run, you can just pile your money into it. Remember, you're going to buy fewer shares, but you're looking at your percent. So if Google makes a 50% run like it did from 200 to 300, that's a 50% run. If the stocks turns around and starts to break down, you may lose 3 or 4% on your money. So remember the risk management here. So your risk reward ratio is enormous on the expensive stocks. So remember, risk versus reward, maintaining the healthy reward to risk ratios, really important. Cover that on some recent videos. Is enormous on the expensive stocks, and these are the real quality stocks, and they make huge runs for long periods of time. So this is the interviewer saying to Dan in the orange. So you're saying, don't make the mistake of buying a stock because it's inexpensive. Buy a stock because it's the one that's actually got the greatest potential for making a big move. So you want to find the market leaders dominant in their space with quarter-over-quarter earnings increases and stocks that basically own the space, which are leaders producing new products, new services, new management. Is that correct? Dan replies, that's correct, and it's basically known as the CAN-SLIM formula by William O'Neill. It's absolutely brilliant. I just have to hand it to O'Neill. I focus on those CAN-SLIM leader stocks, and then I use my own trading style to enter and exit the trades. So now we're going to go across to Market Smith, and I'm going to show you a screen that I like running to find the type of stocks, the liquid leaders, the CAN-SLIM leaders in the market that Dan looks to trade. Okay, here we are on Market Smith. Remember, if you want to do what I'm doing, there is a discounted trial in the comments below. So come over here, click new screen, and we're just going to call this screen the ZANGER screen. So I want to go new stock screen, and we're just going to call this the ZANGER screen for the purpose of this video. So we've got this loaded up. Now, a couple of things that we want to be doing. I'm going to go to my favorites first. We want the 50-day average volume. We want it to be greater than 500,000. We are looking for the real liquid leaders in the market with this screen. I like using the relative strength 3-month as opposed to the relative strength rating, which is over the last 52 weeks. I just find the 3-month is a much more efficient way to get the stocks moving. So relative strength, this is looking at the stocks versus all of the other stocks within Market Smith's database. We're going to go for greater than 90. Another thing that we are going to do is we would like the stock to be in a nice uptrend. So we want the 50-day to be above the 150-day and the 150-day greater than the 200-day. So we are going to click yes on that one. And now we're going to go across here. Let's start putting in some earnings to this. So percentage change last quarter, and I'm going to click include stocks with negative comparisons. We're going to look for stocks greater than 50%. Okay, high bar. So you can see we've already filtered it down from 9,652 stocks to 52 stocks, but we're not done quite yet. Now what we're going to do is we are going to come down here. We are going to go into the sales, and I'm going to say, here we go, sales percentage change last quarter. I want that to be a minimum of 50%. Now we are down to 19 stocks that meet this requirement. let's see what 19 stocks we have, and you can see them down here, and I'm going to pick off a couple of them to show you. So the first one that I'm going to show you is going to be ANET. So let's take a look at ANET. So again, what are you looking for? You are looking for stocks that have huge earnings, huge sales, fantastic relative strength, lots of liquidity, and own their space. So this one here, ANET, look at the consistency of the earnings, look at the consistency of the sales in terms of year-over-year growth, quarter-over-quarter growth, so the sequential growth is there. And then look, you have Fidelity in here. They are adding to their position in recent quarters. RS lines are fantastic. The stock is just pulling back in to its 10-week line, which is this red line that you see here, and putting in this little hammer type bar, and it's come out of a very large base in here and had a bit of VCP action. 1 contraction, 2 contraction, 3 contraction. Looks very, very strong indeed. Then let me just scroll down this list. Remember that we only have 19 stocks here from this screening criteria out of around about 9,600. This is the creme de la creme, and I'm going to show you, let me show you at least one more. Maybe I'll show you 2 more. No, I'll just show you 1 more for this one. You can go and do your own screening. This one here is On. So apparel, shoe related company. I actually have a pair of their shoes. My wife has a pair of their shoes. Really like it. Really like the product. Take a look here. Look at the earnings coming through. 4 quarters of triple-digit earnings. Look at the sales accelerating as well. Look at the estimates for the next couple of years. Look how the guidance is up as well. This stock has come out. If you know about price cycles, this stock has come out of a phase 1 base. Huge move up here. Look at the move up here. Look at the huge volume this stock has. And now I'm looking for it to start building a flag. But the likes of ANET, the likes of and On, these are potentially, understand the kind of point that I'm trying to say here. These are the potential Apples, the Googles, the Amazons, the SanDisk. I know the business models are completely different, the Qualcomm, so on and so forth, of 20 years ago when Dan was having that huge run, 20 years ago, 25 years ago. So this is how you find the leadership. You're looking for extreme relative strength, the strongest stocks in the market that are extremely liquid, have the really high earnings, have the really high sales, preferably they have the estimates there. They are market leaders, dominant in their space, preferably they have new products, exciting products, and expanding industry as well. So I will wrap the video up there, guys. I hope you have really enjoyed that. You've learned a lot about Dan Zanger and how he trades. Please do subscribe to the channel if you're new here. Press the like button if you've enjoyed the video, and I will see you in a future video.